And we are live. Good evening, everyone. Tonight, we will be discussing Jay Morrison's response to the SEC report. It was absolutely laughable. At this point, it's extremely clear that he's not only in over his head, but he's absolutely deflecting. He's trying to make it seem as if people are misrepresenting the SEC report, as if I'm COINTELPRO, Tony the Closer's COINTELPRO, all of the previous business partners are somehow COINTELPRO. And after listening to his response, it's safe to say that he just absolutely doesn't think that you're intelligent enough to understand what's going on. When we get to the part, and we're going to start right from the beginning at this part, when he says that he has 4 partners and that he hasn't received a salary from TREF, but the people, the 4 members who no one knew about prior to him saying this, can then pay him, it's like, it's laughable. Then he says, well, his wife doesn't receive a salary as well. And so who received the management fees? Who received those 5.5% management fees? Someone out of the 4 people received the fees. He never disclosed that. Who is that person? Now, we are going to find out through follow the paperwork as we get into the information that his wife's a partner. His brother's one of the partners, allegedly. He's one of the partners, and the guy Rashawn's a partner, who, oh, by the way, is one of the people who received the loan for the 2 Parsons properties. See, there's something known as tricknology, and this is what he's trying to pull on you right now. He's basically saying that you're not intelligent enough to read between the BS. Then he tries to go into the general administrative and marketing fees. And he says, well, $260,000 of that was for the compliance, and we had to pay the lawyers for the DOJ and the FBI investigation. And then he talks about let me make sure I'm correct, $339,000 went to vendors. But then we find out, as he starts speaking, that he's running a conglomerate, and most of the quote unquote umbrella companies that's underneath TREF's umbrella, he just so happens to either have his name on a documentation, or the guy Rashawn's on a documentation. So these vendors who received $339,000, the question would be, are you or one of your companies that you're managing or that you control receiving a portion of that $339,000? See, you're not talking to a fool. And it's a reason why we're going to get into this recorded call. He had a call, a conference call, but it was pre-recorded, meaning that he did not let the investors get on the call and ask questions. See, I make these videos to teach you. I don't make these videos to, troll people or hate on successful black men. I make these videos to teach you how business is supposed to be conducted. As an entrepreneur, you can make money and you can lose money. When you look at, quote unquote, the public markets, every quarter, companies, they have an earnings report. And what they do is they have analysts come on the call and they speak to other professionals in the industry that can ask them the necessary questions. See, I'm not a real estate professional, and I'm asking these questions, not saying that I know, not saying to misrepresent. I'm asking you these questions because you need to address the information in an articulate way that people can understand, in a transparent way. No one would have known about the JM Rep stuff had I and Follow the Paperwork and False Prophets and other people not actually dug into the actual paperwork to cover that. You had a recorded call because you don't want to address any questions. You want to skirt over stuff and not answer it. And then you want to try to play the quote unquote good guy, Robin Hood. I'm not receiving a salary. But oh, by the way, you took the management fees when the company is losing money. So now you decide to take a management fee? Oh, but you're not receiving the management fee directly. One of the partners are receiving the management fee directly. And oh, by the way, they can pay you. They can decide to pay you. So the nigga, you got paid. See, at a certain point, I'm starting to lose my patience right now because you're not going to sit up here and play with me like I'm stupid. And you're not going to talk to me because, see, me, if I have my money in this fund right now, I'll be at his front door. Real talk. If my money was in that fund, I'll be at his front door right now because you're not going to sit up here and piss on me and tell me it's rain. And this is why I'm showing my face, because I want you to see my face. I'm not some troll, and I'm not hiding behind no black. I'm not Jason Black or one of these other people trying to hide behind, some identity or some, blank screen. You're playing games with people's money. You're experimenting with people's money. You decided to take fees when the fund is underperforming. You've lost over $1 million. No one's jealous over you. You're not successful. You're failing. You're not successful. You're failing. And it shows. So now what we're going to do, we're going to listen to this call, and we're going to listen to this man blatantly in your face just tell you what you're hearing is not what you're hearing. So let's listen to it. And by the way, if you can see me and hear me clearly, just type 1, like this video, share this video, subscribe, hit the notification bell, join the mailing list so that you can be notified, and let's get straight to the information. So we see ones coming in. So let's flip this over here. Let's put on the speakers. Because I'm just, like I said, I'm just to the point where, I'm telling you, man, this is just, at this point, it's embarrassing.
If I'm correct. I think this is right. Okay. All right. And thank you guys for your patience. Just take notes. Like really write notes for yourself. Write timelines on this. Like I want us to be prepared and equipped. I want to build up and can continue and maintain our confidence and our trust and offer this level of transparency. I'm so happy to, on behalf of my wife, our partners, our investors, everyone. Like this is our legacy here. Like this means something to us. 2019 expenses. There is a misrepresentation of this line in your SEC document. So I want to equip everyone with this information. What it reads is marketing, general, and administrative expenses were $766,000 for the year ending December 31st, 2019. Stop. I need you all to read, digest, and comprehend with me, and I'm gonna break this down for you. Everyone's saying, what? You spent $700,000 on marketing? Family, let's read together. Marketing, general, and administrative expenses were $766,000 as of December 31st, 2019. Let me break that down for you. Our largest single expense and line item was legal fees of $260,864. I want you to write this down. Out of $766,000 of operational expenses, the largest single expense was $260,864.58, much of which resulting from the SEC and DOJ investigation and compliance. We got to keep compliance. The next expense is outsource services. So I know there was a misrepresentation or misread where folks think there's only 2 people operating the organization because we, as of 2019, had 2 full-time employees. But you have to understand.
It's not a misread. In the document, it says you have 2 full-time salaried employees, and the rest of the people are vendors. The question we want to know when you state this number, are you or any companies that you are affiliated with or have a controlling interest in or an investment in receiving compensation from the Tulsa Real Estate Fund. Listen to what he's about to say because this is extremely important.
In that same line, we talked about there being other vendors and contractors that supplement our workforce. So our other outsourced services expense, everybody write this down. These are video notes, edit the clip, post it on YouTube, post it on Instagram. These are the facts. Our outsourced services were $339,237.93. That went to chief compliance, real estate analysts, real estate portfolio managers, our treasurers, our underwriters, etc., and our employees. This fund is comprised of bookkeepers, auditors, treasurers, third-party administrators, investor relations specialists, investor relations managers, compliance officers, business administrators, portfolio managers, underwriters, all that. These people, not things. These are the contractors, the vendors or employees, which comprise of 300.
Again, for those of you who support Jay Morrison, because listen to me, as we go through this call, I want you to understand. I want you to follow what I'm saying here. He states that he is a serial entrepreneur. I'm quoting him verbatim what he says out of his mouth, and you're going to hear him say it. He's a serial entrepreneur that has multiple businesses underneath the TREF umbrella. He has a conglomerate. And it just so happens that the companies underneath the TREF umbrella, most of these companies, he has a controlling interest in or an investing interest in these companies. So when he says vendors, and he says $339,000 went to vendors, what you need to be asking him if he had a live call was, are you one of those vendors? Meaning, do you own one of those companies? This is extremely important because he's trying to play you like you're dumb. And see, this is what gets me hot. I'm telling you, if my money was in this fund, I'd be at his front door right now. I'm not playing with you.
$9,000 of expense that are here and in the fund, right? So marketing, which we'll get to a little later, I think some notes on that. The marketing in our fund for the entire year of 2019 was not more, actually for 2019 and 2018, was not more than, much more than $55,000 total in marketing. And we'll get to that line item in a second in our joint marketing agreement, which is misrepresented. Again, I want to tell you, marketing expense for our company, we saved money leveraging our sister company, the J. Morrison Academy. We actually saved money in our fund. I'll talk about that in a little bit. We raised millions of dollars of capital on a limit. And God might bless me in whatever challenges. I can't guarantee anything. I won't and can't and legally guarantee anything. But if the fund doesn't win, I know it could be one of the biggest stains on my last name and on my legacy in a lifetime. Guys, we gotta be practical and think that as a mature grown man, and a man who loves our community and loves my reputation and my legacy, that I'm giving my best to make sure the fund wins. Not to milk the fund, to bleed.
Your legacy is garbage. Your legacy is having young Jeezy parade around, you and Jeezy parading around a fake $1 million check, allegedly. Your legacy is scheming multiple people, NFL players, real estate investors. Your legacy is backdooring your business partners like Roderick Stanback. That's your legacy. Your legacy is almost bankrupting Tony the Closer. That's your legacy. Your legacy is trash. It's garbage. And this is why you have to use the ancestors to try to stand on their backs, because you can't stand for yourself. That's your legacy. Your peers don't respect you. This is Kenny Rushing. Oh, you know him? The guy who allegedly said you stole his story? Let's listen to what Kenny Rushing has to say. Let's listen to what your peers have to say about you. 1 second. Let's put this up.
I don't think he's a horrible person. I just think that he has horrible business ethics. And I think that, as he said, that this comes out of his own mouth, you know, in this explanation video that he posted on YouTube and Instagram, when he considered doing porn because he had lost all of his money in real estate. You know, I was just looking for my next hustle.
You may have heard a podcast or interview. One of my ex-female friends said I considered doing porn. And I hate that my daughter's got to hear this, but I did. I literally met with a porn director, and I was trying to figure out what my new hustle would be.
This is not the next hustle. Listen to what he's saying. I was looking for my next hustle. What is he doing now? Is this your next hustle? Are you sincerely passionate about trying to help out Black folks?
That's your legacy. That's what your peers think about you. This is what your peers think. This is not me saying this. These are the people who you're competing with, that you're, rubbing elbows with. These are people in the real estate game. These are successful men. You're telling me an NFL football player like the Wilkinson dude who's earned millions of dollars, he's a hater? Everyone's hating on you. Tony the closer. Looks like he's doing well to me. Looks like his students are doing well to me. He's hating on you too. Everyone's hating on you. Come on, man. You sound stupid.
To hurt the fund, to mismanage the fund, but to ensure that we win to the best of my ability for all of us, including for my legacy and our legacies, which are tied together in this partnership. So, also, management fees. Management fees incurred were $413,752,000 for the year ending December 31st, 2019. Stop. Management fees did not say J. Morrison fees. First and foremost, $413,000 in 2019 goes to the management group. The management team is comprised of 4 partners. There's 4 partners that did not receive any salary. I do not take a salary from the Tulsa Real Estate Fund. For all my efforts, for my energy, for my reputational risk. At this point, for my freedom risk. And at this point, for my life risk. Multiple documented death threats to my family running this fund. And if anybody wants to see them, we can post them. Despicable death threats. Death threats on my unborn daughter. Death threats to my wife on my unborn daughter. For all of those risks, there's a management fee that the management team receives that 4 partners are a part of, not Jay Morrison. I don't even take a salary from the company, family. Let's put it in perspective. So, when people fire back and say, Jay.
So, if you don't take a salary, follow this, because he's about to use double speak. And this is why you have to read the book 1984. Because on one end, he's saying that he doesn't receive a salary, but then he's going to say that the partners can decide if he receives compensation. So what are you trying to say? Did you or did you not receive any type of compensation in any type of form from the money that the managers received? Can they then pay you? Listen to what he's about to say.
I didn't take anything. I and my partners earned. And from 2016 and 2017, growing this company and building up to launch this company, we took no salaries.
You did not earn anything. You lost money. See, this is very important. You didn't earn anything. You're supposed to earn a salary. You did not earn a salary or earn the compensation because you've been losing money. And when we look at the amount of investment that you have in the actual business right here, let's zoom in so that we can see it. It says as of December 31st, 2016, and for the year ended December 31st, 2017, the company has $0 in cash and total liabilities of $15,350. That's what you invested to start this business based upon this documentation. So what have you done or invested in this business to earn over, what, $500,000 in management fees? What have you done? What have you earned? Please tell me, what?
Any management fee. The first 2 years of organizing this business. No compensation from the company. Okay? Let's talk about mortgage notes receivables real quick. During the year December 31st, 2019, because the 2019 audit, we invest.
Now, let's look at these partners. This is important. Let's look at these partners. You could go to the false profits page as well. So it says, Jay Morrison stated that he is one of the 4 managers of TREF, so he doesn't get all of the management fee, and that it's a split 4 ways, as if this is supposed to make fund members feel better about him determining a year where the company lost $1 million was a fine time for him to collect a majority portion of his outstanding management fee on the SEC filings under directors, executive officers, and key employees of the manager. Jay is the only person listed. When Jay made that statement, that was an opportunity for transparency to then state who else the management fee was split with. But in true Jay Morrison fashion, he said nothing. Looking at the management structure, Tulsa Founders is the manager for TREF. Jay Morrison Real Estate Partners, which isn't properly registered in Georgia to do business, is the manager of Tulsa Founders. Morrison Holdings is the manager of Jay Morrison Real Estate Partners. The 4 names listed on Morrison Holdings registration paperwork is Jay Morrison, Rashawn Mitchell, Art Morrison, and Ty Burden. Are these the partners splitting the management fee? Where have we seen the name Rashawn Mitchell before? He is a partner and the signer for the loan given to JM Rep 23 for the Parsons Street properties. Now, later on, in this SEC response video, he states that his wife is one of the partners. So now we know who 2 of the partners are. We know that Jay Morrison is a partner, and we know that the wife is a partner. Who are the other 2 partners? Why do we have to do this speculation game? Why do we have to sit up here and play Blue's Clues and trying to put pieces together? Why do we have to be Inspector Gadget? Why do we have to play the game Clue? Why can't you, Mr. I Love Black People, Mr. Transparency, just say, who are these 4 partners? See, this was supposed to be explained prior to you even taking a dime from the people. Now, all of a sudden, you want to start talking about, oh, there's 4 partners. Well, I don't receive a salary, but then they can determine if I need to get paid. Which one is it? Which one is it? See, at a certain point, you have to start saying to yourself that this person doesn't respect you. He doesn't respect you, and he thinks that you're stupid. At a certain point, you have to be able to listen to yourself and say, what he's saying doesn't make any sense. Now, let's go back to some of the deals. Because I highlighted certain parts, and I want to make sure that I stay, because I can get off track at certain points. So let's get back to the video. Let's go to the 8-minute, and let me give you timestamps for those of you who are TREF investors. When he talks about expenses, he starts at the 31-minute, 50-second mark. Now we're going to go to the 8-minute, 50-second mark, where he starts talking about appraisals, because this is extremely important when he starts talking about this. Let's go now to the 8-minute, 50-second mark.
Bought back the block in Macon, Georgia, 98 units, 2 blocks, 98 rental units, that we also will discuss a little more in detail later, our Macon, Georgia property that we are all in with our partner for about $3.8 million. That property, we just spoke to one of those reputable commercial real estate brokers in the country, and they just gave a broker opinion value of it for $4.8 million, over $1 million of appreciation since we acquired it a little over a year ago from our value adds. That's today.
Now, understand, let me explain to you what's problematic with what he just said. He said an opinion. Did a certified appraiser come and appraise the property and tell you that it's $1 million, it's worth $1 million more? Do you have documentation to support the claim that you just made? But you want to sit up here and say that somehow I'm misrepresenting what you're saying, but you're sitting up here and you're stating something as a fact or trying to state it as if this is something good, but then saying, oh, it's an opinion. See, that's tricknology. That's a play on words. That's a play on words. Where is the documentation? Where are the appraisals to actually prove that those property in Macon, Georgia is worth what you're saying it's worth? See, because this goes back to the after repair value. This goes back to you giving out a note above 70% ARV when you said that you wouldn't do that in the SEC document. But you could come out and say, well, the property's worth $900,000 based upon, improvements made. Excuse me. Come on, man. That doesn't make any sense what he's saying right now. I'm going to replay it for you again. Just listen to what he's saying. It doesn't make sense.
Again, multi-88 rental units that we also will discuss a little more in detail later. Our Macon, Georgia property that we are all in with our partner for about $3.8 million. That property, we just spoke to one of those reputable commercial real estate brokers in the country, and they just gave a broker opinion value of it for $4.8 million, over $1 million of appreciation since we acquired it a little over a year ago from our value adds. That's today. Again, multifamily property, buying back the blocks. We then talk about, we would do lending activities. We talked about the several million we loaned to Black-owned businesses, Black real estate.
So again, if you're a real estate professional, and I'm an idiot, I'm a hater, I'm a clout chaser, I'm a bussy warrior, I'm an Uncle Tom, I'm a coon, I'm an agent. Does that make sense to sit up here and state something as being a certain value, saying that you're going to be transparent, and it hasn't been appraised at that value? Who are the four partners if you want to be transparent? Now, let's listen to the investment strategy, because I also want to teach while I'm going through this, because people say, well, what's the solution? Well, I'm about to give you a solution right now. And thank you for the person who donated the $10. I appreciate it. Let's go to the 22-minute, 30-second mark. And again, he said, write this down in the videos, right? Take notes. Well, I'm taking notes. I took pretty good notes. So let's go here, 22. There we go.
Equivalents of $615,000. To date, that number is over $3 million. So, received $47,000 in transactional management fees. Also in that year, we received $150,000 of mortgage interest. Again, another way we make money, lending activities in our investment strategy. Also, through the end of the year, December 31st, 2019, after acquisitions and loans accounted for, the fund still maintained cash and cash equivalents of $615,000. To date, that number is over $3 million. So now
follow this, because this is important, right? Follow this. At this point, he's saying that the fund only had $615,000 of free cash. So now you have to ask yourself this question. Would the fund be solvent to properly run with just $615,000 left? So now, is that $3 million that you raised from black people, is that the money that you're counting now as free cash? Because then basically what you're telling us is that because of you not knowing what you're doing, based upon how I'm interpreting this, you got to a point where all of the capital was loaned out or invested, and you only had $615,000 left. So that means that you was basically to the point where the fund would be, quote unquote, insolvent or running low on cash because you're not using debt to lever up. Now, how does this make any sense? Tell me how does that make sense to you? So now, after he stated he doesn't know what he was doing, after he got down to only $615,000, you basically saved him when y'all gave him that extra $3 million. When he came out and said transparency, no one knew what they were doing. Oh, wow. Well, if no one knew what they were doing, and he basically ran the fund to the point where it only had $600,000 left, you basically bailed him out again when you gave him the $3 million after he told you he doesn't know what he was doing. Think about that. You, the investor. And again, I gave you the timestamp. Thank you for the donation, Kenny Russian. Appreciate it. Let me see if that's the real Kenny Russian. I don't know if that's the real Kenny Russian, but thank you. I appreciate the donation because you're one of his peers. And basically, from what I understand, he basically stole your story, stole your swag, and ran with it. And now here we are where, again, you, based upon what I've dug up about you, you're actually a professional in the industry. You have students all over the world. No one's running around here saying that you scammed them. You're dealing with accredited investors. So these are people that actually have the money. So therefore, if you were scamming them, they have the resources to be able to go after you. Yet you don't hear these accusations out here about Kenny Russian. You don't hear these accusations out here about Tony the Closer. But yet you hear these accusations from wealthy people about Jay Morrison. But listen to this because this is important.
Over-investing, we were making sure, remember, fund management is not like running a regular mom and pop real estate company. We talk about managing an SEC.
This is a mom and pop real estate company. No one on your team has investment experience. No one on your management team are real estate professionals, meaning that they've actually transacted in hundreds of millions of dollars in real estate. No one on your management team has experience running a fund, working at a major fund. When you worked at the real estate firms you worked at, allegedly they let you go for not performing. So tell me, if this isn't a mom and pop shop, you have a spoken word artist based upon her own admission, a spoken word artist, your wife, running a multi-million-dollar real estate fund. Make that make sense, please. Make it make sense.
Fund. And when you talk about managing 15,000 investment partners from 22 countries, when you talk about managing over $10 million of capital, it is a different monster to do so and make sure you have the proper bookkeeping, auditing, financial controls, compliance, legal, portfolio management, asset allocation, technology, right? And all cybersecurity and all what goes into protecting all 15,000 plus investors, our capital, our assets, staff members, and all that we're going to get to. But again, we put over $6 million to work and still kept enough reserves for investment and staff operations of $615,000. As of December 21st, 2019, the fund held approximately $5 million in real estate and collateralized assets with no mortgage and debt. Meaning, as of the end of 2019, we had over $5 million in real assets that we owned with no debt or no mortgage in them. So should COVID had destroyed.
This is a teaching moment for so many of you. And I like to use these moments to teach. What he just said makes absolutely no sense whatsoever. We live in a debt-based economy. We live in a fractional reserve lending economy. Debt is money. we are experiencing inflation at about 3% every year. That's if you believe the government CPI data. If we actually calculated inflation the way that they used to calculate it, we're probably running inflation at probably 7 to 8% per year. Assets like real estate, stocks, paper assets, or hard assets, they tend to outperform inflation, or they rise with inflation. So this is why banks are willing to give you leverage to then go out and acquire real estate. Why is this important? Look how low interest rates are today. Why would you not want to allocate a percentage of your portfolio, a percentage to leverage so that you can have actual capital to then jump on deals or distressed properties or distressed sellers in COVID? See, silver is money. Gold is money. Why? You can't print more of it. Real estate, people look at that as money, right? It's a hard asset. That's money. See, this is what happens when you give your money to a person who they're not studying the data. They don't understand economics. They don't understand that we're in a free floating currency. They don't understand that. All fiat currencies eventually return to their original value, which is zero, worth nothing. Gold has always been money, and land, right? Because you can't grow more of it. So why would you not allocate 10% or 15% of your fund to leverage? Why not? Do you think that that's a sound use of capital to go into deals all cash? And then now COVID hits and you're not collecting any rental income from these assets. So you're going in at high ARVs anyway in these properties. The legacy center is not even finished being built out. We're going to get into that documentation as well. So you're basically tying up all of your capital in these properties. So if they don't perform, you have no wiggle room. How does that make any sense? Now I know what you're saying to me. Oh, you don't know what you're talking about. You're not an economist. If you come over here to Fred, right? This is the Federal Reserve Bank of St. Louis that tracks data. See, when I come in here, I want to teach you guys so you can understand. This is showing you, the blue line is showing you all of the debt, every single sector, all of the total debt, right? There's over $70 trillion worth of debt, $80 trillion worth of debt in the system. And there's probably what? I can't see because my computer, my webcam's blocked. There's what, $16 trillion of actual cash between checking deposits and things that could be converted into cash. You have more debt in the system than you have cash because debt is money. That's what gives the US dollar value, is debt. The fact that you're willing to go into debt for the next 30 years means you have to keep working for more dollars. So if there's less dollars in circulation, markets move with supply and demand. So it's an artificial cap on the US dollar. This is why you got to educate yourself. You're giving your money to a brother that doesn't read. He's not well studied. He doesn't research. He doesn't know what he's doing. Where's his acquisition team at? Acquisition team. How are they acquiring these properties? Right? There's good debt and there's bad debt. Robert Kiyosaki teaches you this. There's debt that pays you, and then there's debt that penalizes you. And see, understand, you're trying to compete with Fortune 500 companies. And when I say Fortune 500 companies, I mean big time firms. When I say Fortune 500, the Carlyles, the big time hedge funds, the institutions, they're using debt to lever up. He's telling you he's going to stop gentrification. How? You're not even using leverage. How are you going to beat the big boys? Come on, man. This doesn't make any sense. Doesn't make any sense. Educate yourself, man. I make these videos to educate you so you can learn how to fish for yourself. I don't want to sit up here and teach you and you give me your money. No, I want you to take your money and you manage your money. This man doesn't know nothing about economics. What books have he read? Marcus Garvey's idea of economics is outdated and it doesn't work in the 21st century. Come on, man. It doesn't make any sense. Now, follow the paperwork. Again, go follow this person doing great research. Let's look at the lease agreement. This is important. This is important. He says that in this video, he talks about him paying market rent. That's what he says. Well, we look at the lease agreement he has. He says paying market rate rent was something the Morrisons were adamant about. The lease agreement appears to show otherwise. Looking at J. Morrison Academy's lease at the Legacy Center, there are several things to question. The monthly rent is $3,763, which means yearly they pay $45,156. The office is listed as the second floor. The second floor is roughly 5,000 square feet. $45,156 divided by 5,000 equals $9.03 per square foot for the year. Furthermore, there is no mention of JMA having to pay building operating fees, maintenance fees, real estate taxes, property insurance, and or utilities. Additionally, the lease states that the use of the building Wi-Fi is free. J. Morrison has previously stated that the due diligence was done based on triple net leases at $17.31. So now he's housing his businesses and his wife's businesses inside of Treff, inside of the Black House. And he's giving himself what appears to be, based upon this information, sweetheart deals. Now, what people call out accurately in this document is that this was added later, and no one knows exactly when this was actually signed. No one knows. So could this have been? Maybe. I don't know this to be true. I have to say that to protect myself. Did he purposely add this information now? Why wasn't this put in there as soon as he decided to put JMA Academy inside of the Legacy Center? See, this matters. That's not transparent. See, if you don't know what to look for, you're not going to look at what he's saying. It doesn't make any sense. It says market research shows the rent for a tenant that pays no building expenses should be at least $21 to $24 per square foot, which is $105,000. Now, when he talked about and spoke about compliance, when he spoke about the $339,000 in fees to vendors, is his wife one of the publicists? Is she in the publications department? See, these things matter. All of these things matter. All of these things matter. And he did not address these things because he doesn't want to talk to people who are professionals in the industry, real analysts. Like I said before, when you have companies and they have their stock, they have their quarterly earnings, they sit down and they answer questions from analysts. The fact that he did a pre-recorded call should tell you everything you need to know. Why wouldn't he address you like a man? Why wouldn't he allow you to call in and answer questions that you have? He won't do that because he knows it's bullshit. Let's get back into the video. And again, we're going to jump ahead because I can go on for days about just everything that he was saying that doesn't make any sense. We're going to go to the 47 minute, 30-second mark of this call. Hold on, let's move to that.
Well, out of the fear of misunderstanding anybody, right? Somebody else. And I'm really talking about of another ethnicity.
Hold on, let me correct this. We're going to the 43-minute, 30-second mark.
Real estate and entrepreneurship. We are offering that capital because of what we pulled together. Developer, Black-owned business in a gentrified area of Cincinnati. So people say, what happened to buying back the blocks? Don People says capital The access to capital is a fuel to real estate and entrepreneurship. We are offering that capital because of what we pulled together. All right. And many of these opportunities also come with extension fees. So if they want to continue their loan, these are usually short-term loans for development. They did a beautiful job on a rehab. They're finishing that up. They're trying to disposition it or refinance it now. But we loaned again $438,000 in the 7th Ward of New Orleans to a Black woman development business. This is what we've done. These are the facts of what have we done. And this is as of 2019. In July 15th, 2019, I brought an opportunity to the fund. We enter into an interest-only note in a principal amount of $548,000 related to a loan for the refinance of 2 student housing properties totaling 28 units located at Spelman College and Morehouse College.
Okay, so Tosin Adolowe, am I misrepresenting the fact that he stated he's a conglomerate? Very, very, very simple. In this video, we're going to hear him state that he is running a conglomerate. I never said that he's scamming people. I never said that he's stealing money. I said what he's doing is unethical. Now, I want to be clear here. Number one, Tosin Adolowe. I never said you were a partner. I said, who are the partners? That's part of transparency. See, we have to take a step back. No one's ever stated that Jay Morrison is doing anything illegal. It's unethical. For him to sit up here and state that there's 4 partners and he doesn't receive a salary, how does he get paid? What am I misrepresenting? He said there's 4 partners who received compensation. Who received compensation? Okay, now look at this. Your name never even came up. So I'm just going to probably block you because I don't even know who you're talking to, Tosin Adolowe. When did I ever say that you were a part of it? So I don't know what you're talking about, where you're coming from, even if you're a real person. So explain to me, because I'm about to block you. I've never even mentioned your name. I asked a very specific question. Very, very specific question. Who are the 4 partners? Who are the 4 partners? Now, if there's 4 partners, as he stated, which one of them received the $400,000+? Let's go to the paperwork. See, I don't have time to play these games with you. Right here, these are the management fees in the SEC document. Who received the $413,000 and who received the $182,000? Who? Who? Where's the misrepresentation at? Okay. Since we want to keep going. See, I like to come with factual information. Let's go to the PowerPoint presentation. Okay. Let's make this full screen. Right here, we see that there's a note for $548,000 on the Parson Street properties. The guy, Rashawn Mitchell, is right there. JM Rep 23 LLC. We know that Jay Morrison has an interest in that company. He then says that they, quote unquote, gifted this to Tulsa, to Treff. Okay. So please tell me where I'm misrepresenting at. Now, these Parson Street properties, they were listed on LoopNet for $701,000. Isn't that higher than 70%? Where is the misrepresentation at? They gave out a note for $548,000. He quote refied. The two properties combined are worth $701,000. That's higher than 70%, where he stated in his documentation that he would not do that. Right here. Right here in the documentation, it says mortgage notes receivable and credit policy. We intend on investing in mortgage notes receivable from developers and other real estate investors. Each mortgage note receivable will not exceed 70% of fair value of the real estate, which is to be pledged as collateral. By policy, we routinely assess the financial strengths of the mortgage and believe that its credit risk is limited. Where's the misrepresentation? Where's the misrepresentation? Tell me right now, where am I misrepresenting anything that I'm stating? Jay Morrison has said out of his mouth, I can pull up the receipts. Transparency. No one knew what they were doing. Where am I misrepresenting him in any capacity? Because he keeps saying misrepresent. Well, someone said missing. Okay, where am I misinterpreting? Where am I misrepresenting? Anyway, just please, just teach me. Teach me. Teach me where am I misinterpreting or misrepresenting any of this information. Teach me. I'll stop the stream right now and I'm looking. Right now I'm going to look at the chat. I'm going to spend the next 5 minutes. I want to see where in this video I misinterpreted anything that I'm stating, where I misrepresented any of the information. See, no, where, please, right now, I'm looking at the chat. I'm waiting for one of you to show me where. Exactly. Because you know I'm not misinterpreting and you know I'm not misrepresenting. I'm posing the questions that any astute analyst would have asked him on that conference call. I'm doing what the finance PhD should be doing. Now, thank you for the donation, Golden Gate. Where is Jay's partner in crime, Boyce, Mr. PhD? Why has Boyce avoided presenting the report to uplift our people on his channel? FBA conference was also a good opportunity to showcase Richie Rich. Laugh out loud. Who wants to present trash? And you know what? That's a very good question. Could clarify a lot of this for you, would definitely speak with you and divulge where I feel you may be incorrect. I'm not fighting with you. I'm actually for people's constructive criticism. Okay. Cool. If you say so. If you say so. Cool. I'm not going to be right. So per Boyce Watkins' logic, and I think that this is important, Boyce Watkins' entire claim to fame is financial literacy, right? And yet now we're trying to apply financial literacy to a black company, but he feels you shouldn't use your financial literacy against black people. You should do this only for white people. Now ask yourself this question. And let me show my face. I want to ask the chat this question. This is a really, really important question. The whole purpose of you investing with Jay Morrison is because he was supposed to do something that white people would not do to you. He was supposed to give you something that white people couldn't give you. What good is it to invest in a black business if the black business is going to treat you just as bad, if not worse, than the white business? Think about that. You invest in a black business because you think that the brother's going to be upfront with you and do you better than a white company. Yet he pulls the same stunts that a white business will pull on you. So then what good is it investing with a black business? Because you can invest with a white company or CrowdStreet or one of these other crowdfunding platforms. I believe it's Fundrise or CrowdRise, something like that, something to that liking. And you'll get your returns. You'll get your documents. You'll get the things you need. Look at Grant Cardone. He runs a real estate syndication fund. He charges a 1% management fee. Grant Cardone charges a 1% management fee. Jay Morrison charges a 5.5% management fee. He does a 35-65 split, meaning that he keeps 35% of the profits and the investors get 65% of the profits. So now, why would you not go with a quote unquote better opportunity, a fund that's actually paying people, but you'll go with a black man who's going to do, the black man's doing you worse than the white man. The black man's charging you 50% of your profits if you ever make a profit. The black man's, he's getting paid before you get paid. Now, you know me, I come from the trading world. Hedge funds charge 2 and 20. 2% management fee up front, 20% of the profits. 20% of the profits, meaning they don't get paid unless you get paid. They don't get paid unless you get paid. Yet this man is getting paid to underperform. And then he has a quote unquote conglomerate of other businesses and vendors who we don't know if they're receiving any of this compensation because he only has 2 employees. Who are the vendors? See, that's true transparency. That's true transparency. Won't do that. Who are the vendors? Oh, you don't want to release that because, you know, the agents and the government will come after you. Come on, man. Does that make sense to you? Does that make sense to you? Please. At a certain point, you have to realize when someone's playing you. And that's what he's doing to you. That's what he's doing to you. He's playing you. Right now, prime example. Mr. Tassin Adalowe just popped in my mind. Do you know that Tone Talks offered him to come on Tone Talks channel? Tone Talks gave him a chance when he first was going to launch the fund. If he was so transparent and he was so swaggy and he was so rich, why wouldn't he go on Tone Talks and talk to Tone? You know why he wouldn't? Because he's a sucker. Yeah, I said it, and I'm showing my face. He's a sucker. That's why he won't. That's why he didn't go on Tone Talks. Notice that he doesn't go on any platform that's going to ask him really important questions. He'll go talk to Tamika Mallory, though. He'll talk to Sean King. He'll go on Boyce because they're not going to ask him the detailed, important questions. It's a reason why. He doesn't want any transparency. Because right now, I run my tech academy. I'm having a coding boot camp going on right now. If Tone Talk said to me, why should you be teaching people about coding? I can go and I can pull up my portfolio of projects that I've built. I can go pull up credentials and certificates and coding boot camps that I went through. And I can show you projects that I've actually built and finished and completed. I can verify who I am. I can pull up my repositories. I can verify what I've done. Jay Morrison has proven nothing to no one about anything. All we know is that there's a lot of people alleging that he scammed them. Please, man. It's a joke.
Again, in an area that's being gentrified, in an area where there's historically black colleges, I had an asset in my portfolio of 28 rental units, 2 student housing units that was in the AUC that we were refinancing and looking at other companies. And here's what I said, being astute. If I'm going to another lender as a manager of these assets, and I also manage the fund, and in our fund agreements, we wrote that the manager may also, I'm paraphrasing, also do business with or work through other properties or other vendors or other associates, knowing that I own other companies and other businesses. We're leveraging that to our benefit. This is the whole thing. I am a serial entrepreneur. I have been for several years. I have a lot of resources. I leverage them for the benefit of the fund. This is being misrepresented in some stakes as me manipulating, mismanaging, or, for lack of better terms, layman terms, milking the fund or taking advantage of.
I'm going to replay that. He said, I'm a serial entrepreneur. He's telling you that he has multiple entities underneath Treff that's supposed to be, quote unquote, helping Treff. Am I misrepresenting that? Am I misinterpreting that? Because I'm going to replay it for you again. He's telling you out of his mouth that he has multiple companies underneath Treff. Are those companies receiving a portion of that $339,000? For the vendors, I'm going to replay it for you again. Listen. If you don't want to read, at least listen, Tossin.
Another lender has a finance of 2 student housing properties totaling 28 units located at Spelman College and Morehouse College in Atlanta. Again, in an area that's being gentrified, in an area where there's historically black colleges. I had an asset in my portfolio of 28 rental units, 2 student housing units that was in the AUC.
If you had these properties under management, why didn't you include them in the fund when you launched the fund? If you had these properties under management, as you claim, why didn't you include them in the fund when you launched the fund? Who you think you're talking to? You think people are stupid?
Refinancing and looking at other companies. And here's what I said, being astute. If I'm going to another lender as a manager of these assets, and I also manage the fund, and in our fund agreements, we wrote that the manager may also, I'm paraphrasing, also do business with or work through other properties or other vendors or other associates, knowing that I own other companies and other businesses. We're leveraging that to our benefit. This is the whole thing. I'm a serial entrepreneur. I have been for several years. I have a lot of resources. I leverage them for the benefit of the fund. This is being misrepresented in some stakes as me manipulating, mismanaging, or, for lack of better terms, layman terms, milking the fund or taking advantage of. I'm going to tell you why the Parsons Street's investments on these 228 units. It's because I could have went and it would have,
So just so we're clear, Tossin, Mr. Tossin, give me 1 second. Pulled up the wrong one. Mr. Tossin, I want to make sure that I'm accurate. So he's right now talking about these Parsons properties. Give me 1 second. I keep hitting the wrong thing. He's talking about the 2 Parsons properties right now. He's going to mention them. I'm not misinterpreting or misrepresenting. He's talking about these 2 properties right now in the SEC document, 862 and 875 Parsons. Tossin.
And got rates from another lender to refinance the property at 8%. And I said, and I wasn't going to refinance under Treff. I went to other lenders because I was, I would say, scared, if you will. I was nervous in my head about it because of the lack of trust that we have for each other in doing business. And so I was going to actually give somebody else, another institution, my interest payments, even though I have an interest institution, manage an institution and a partner in an institution that does the same thing. So I thought about it and said, if, call him John Wang, anybody, right? Somebody else. And I'm really talking about of another ethnicity right now, because I'm talking about some of the rooted mistrust in our community for many of my Black investors and partners. I know all you all are of African descent, and I have respect for everyone. But what I was thinking about is other communities. You could say any nationality. And if the manager of the fund had the same investment strategy, right, to do lending activity, and they gave that investment opportunity to another fund out of fear of backlash or out of the fear of misunderstanding, they would be giving away the opportunity cost of that money to their own fund or the fund in which they manage and represent. So being astute and being of the Black Wall Street mind, the Black independence mind, it did not make sense, and we still underwrote the asset, but it did not make sense to keep $548,000 in our bank, right, getting 2% interest, where there was an opportunity, mind you, these 28 units appraised for over $900,000. The loan was $548,000. It was under a 50% loan to value interest, where there was an opportunity, mind you, these 28 units appraised for over $900,000.
Stop. Now he's saying they appraised for over $900,000. This is important. Let's pull up the documentation. Now again, am I misrepresenting or misinterpreting, or is these two properties listed on LoopNet for $701,000? So now he's saying that these properties are now worth $900,000. So the logical question would be, if I was on this call and he said that, the question would be, can you provide us with documentation to verify that these properties are worth $900,000? Where is the documentation? Because when we look at these properties, when they were listed online, they were listed at $701,000, which means it's not 50% ARV, it's over 70. Am I misinterpreting something, Tosin? Am I misrepresenting something, Tosin? Please just educate me, Tosin. That doesn't say $900,000. And this goes back to the appraisal that he did on the Macon property. He said a broker, a quote unquote reputable broker, said his opinion, not actual that it was actual appraised, but opinion. Does he have documentation to verify the things that he's saying? When we are doing business, I don't trust anyone. I want documentation. And he has not provided us with any documentation. Just his words. Tosin.
Loan was $548,000. It was under a 50% loan to value. So this wasn't some like super high risk or value deal from an LTV perspective or ARV perspective. I believe it was $905,000 after repair value, stabilized value. And so we made an informed decision and an astute decision, in my opinion. Instead of getting 2% on $548,000 or 1.9%, we are paying the fund 8% on the same capital in a historically Black college community at less than a 50% loan to value, and still pay the fund origination fees as well. And there's still extension fees if we continue our loan like everyone else as well. So that is the, again, details of transparency that I have to like kind of over-explain or explain, and that's fine, of an asset in which I already had under management that the fund refinanced at a fair and reasonable rate, considering a 50% LTV on this asset, all right? So, what else we got? On June 3rd, 2019, JM Rep entered into an amended and restated operating agreement with Alchemy LLC related to the formation and management of Treadway LLC. That's our 98-unit property. Pursuant to the operating agreement, JM Rep, this is JM Rep 28. That is a subsidiary company, 100% owned by the Tulsa Real Estate Fund, right? So Tulsa Real Estate Fund, through the subsidiary, JM Rep 28. Now JM Rep 28, again, saving the fund money. I just want to tell you guys, I'm bearing my heart out. This is transparent.
Now, listen to the bullshit.
We could have formed a whole new LLC for this opportunity, it would have cost us a few $100. Being astute and as financially responsible as possible, I had an existing LLC that was dormant, that I already paid for out of my own or our other company pockets. And we donated that LLC, JRA Rep 28, at no cost to the fund for the fund to use and have 100% ownership of for this investment. I know it's only $300 or $400 for the LLC, but I'm always trying to do what I can to cut our cost so we can have higher revenue and more success. So wherever my other companies or other companies in my management or vendors or resources or relationships, wherever I can leverage them for our betterment, I try. And so that was one example, but the fund 100% owns that company, and that company is the 40% owner in the Treadway 98-unit property that we all...
I want to play that for you again. He spoke about vendors. See, listen to what he's saying. If you just listen to what he's saying, he's using words interchangeably. He's 1 minute saying vendors, then he's saying affiliates, then he's saying sister companies, then he's saying subsidiaries. Notice how he keeps using these words interchangeably. Basically, these are companies or LLCs that he has some type of investment or interest in financially, or that he started. That doesn't make any sense. Let's replay that again so you can hear him say it for yourself.
Together that we just... I can to cut. Being astute and as financially responsible as possible, I had an existing LLC that was dormant, that I already paid for out of my own or our other company pockets. And we donated that LLC, JRA Rep 28, at no cost to the fund for the fund to use and have 100% ownership of for this investment. I know it's only $300 or $400 for the LLC, but I'm always trying to do what I can to cut our cost so we can have higher revenue and more success. So wherever my other companies or other companies in my management or vendors or resources or relationships, wherever I can leverage them for our betterment, I try. And so that was one example, but the fund 100% owns that company.
So, again, I'm not sitting up here misrepresenting, misinterpreting. I'm just stating what it is. I'm stating what it is. I'm not sitting up here trying to be funny. I am not trying to tear a black man down. I'm sitting up here trying to educate people to what's going on and about what's going on so that they can make better financial decisions in the future. You don't invest in something because it's quote unquote black owned. You invest in something because it makes sense financially. You invest in something because you understand what you're investing in. You invest because you've actually went out and did your due diligence. That's when you invest. If you don't understand something, you don't invest in it. This man is telling you that he's a serial entrepreneur while the fund is failing. Maybe you should stop being a serial entrepreneur and maybe you should focus on the Tulsa Real Estate Fund. You have over $13 million of black people's money. Focus on the fund and go out and perform and do what you are saying that you can do for black people. If you truly love black people, do what you said you were going to do. Because see, it's group economics when they want to pitch you an idea, but it's capitalism once they get your money. See, it's work together when they're pitching you the idea. Remember when this was promoted on the Shade Room, it said this power couple is set on purchasing and developing an entire town. It didn't say nothing about no legacy center on the ad. It didn't say anything about you having a conglomerate and multiple companies under your umbrella. You said you were going to develop a town. And you used Tulsa. You invoked what happened to our people in Tulsa. All you did, like somebody just said, you purchased the building and painted it black. But see, this is what they think about you. This is what these brothers and sisters think about you. They don't respect you and they don't value you. You're just disposable to them. You're just another sale. You're just another customer. And there's nothing. Listen, guys, I'm a capitalist. I believe in doing business. Like the white guy said, they use everything in the culture to sell their products. You're going in LA, in the hood, in South Central, in Compton, using Nipsey Hussle, using Jeezy. And you talking about your legacy? You talking about your legacy? What legacy? Come on, man. What legacy? Who you think you fooling? Who you think you fooling? Pull up these documents, right? Look at these documents. This is Street Dreams, right? He never donated $1 million to JMA. These are the tax returns. These are the tax returns. I could pull up every tax return from those years. Not one time. And then Boyce Watkins says, sue him. Let me tell you what he did to the last man that sued him. He filed bankruptcy so he wouldn't have to pay him. So when Mr. Watkins tells you that you should go and sue him, you know what he did last time a black man sued him? He filed bankruptcy so he didn't have to pay him, allegedly. Come on, man. At a certain point, you got to start looking at things for what it is, man. They're using your trauma. I know people sit up here and say, oh, you sell products too. Yeah, I sell products to people who can afford them. I sell products to people who want them. I'm not telling you that I can't beat gentrification. I can't stop white supremacy. No, if you buy my product, that's not going to stop a police officer from shooting you. No, it's not. I don't use half-naked women and Lamborghinis and mansions to sell you no course. I tell you, if you want to learn about something, I can teach you a skill that could potentially help you make more money. That's what I do. That's what I do. I said that I can teach you a skill that can help you go out here and be more marketable and can prepare you for what's to come with the fourth industrial revolution. This man is talking about reparations, a black rights party. He's at Revolt talking about we need our own nationality. We need our own flag. He's doing everything but running the fund. Doing everything but running your fund, doing what he's supposed to be doing. He's dancing all up in the videos. Want to be seen everywhere. Go manage the fund and make some money. And Mr. Tosin, since you have so much to say, go help him, Tosin.
And that company is the 40% owner in the Treadway 98 unit property that we all the profits until we receive revenues and responsibilities. Mr. Morrison is compensated directly by, Mr. Morrison is not compensated directly by the company. And it says it in our.
Listen to what he's going to say. He's not compensated directly by the company. So then who are you compensated by? Listen to the bullshit he's about to spit.
Not the only benefactor or recipient of fund management, revenues, and responsibilities. Mr. Morrison is compensated directly by, Mr. Morrison is not compensated directly by the company. And it says it in our audit. I'm not just saying it. Read our audit. It says, Mr. Morrison, J. Morrison, I am not directly compensated by the company, the Tulsa Real Estate Fund. I don't receive a salary, not for marketing, not for real estate investment, not for underwriting, not for CEOing, not for any of it. I don't receive any salary from the fund. And I could. It's in our operating agreement, in our circular, that I can opt to receive a salary. So for all the many hats and roles.
Give me 1 second. It just stopped playing. Hold on real quick. It just stopped playing for some reason. Let me refresh the video. Hold on. Oh, maybe he took the video down right at the good part. Here we go.
Example, but the fund 100% owns that company, and that company is here and all that. So we negotiated 40% ownership, but we got to get a recipient of, not for any of it. I don't receive any salary from the fund, and I could. It's in our operating agreement, in our circular, that I can opt to receive a salary. So for all the many hats and roles that I play, if this was a money grab for me, I could certainly warrant and have earned a salary in which I do not take or intend to ever take. Although I may receive compensation from the manager or the management team or its affiliate entities. So what I'm saying is, again, we do have a management fee, a 5.5% management fee. That management fee is split, and it was split in 2019 between the 4 partners. That is not just a J. Morrison management fee, nor do I receive any other fees. Outside of that, I've deferred, and our management team has deferred our fees at times, and it says in our agreement.
Let's go back to something real quick. Though. I know, y'all you get upset when I do this, but I have to do this. Let's listen to this.
If this was a money grab for me, I could certainly warrant and have earned a salary in which I do not take or intend to ever take. Although I may receive compensation from the manager or the management team,
although I may receive compensation from the management or the management team. Although I may receive compensation from management or the management team. He's playing you. Listen to it. Listen.
Entities warrant and have earned a salary in which I do not take or intend to ever take. Although I may receive compensation from the manager or the management team or its affiliate entities.
Or to affiliate entities. Now, let's go to the documentation. Let's go to the documentation. When Jay made the statement that was an opportunity for transparency to state who else is the management fee was split with, but in true Jay Morrison fashion, he said nothing. Looking at the management structure, Tulsa Founders is the manager of TREF. Jay Morrison Real Estate Partners, which isn't properly registered in Georgia to do business, is the manager of Tulsa Foundings. Morrison Holders is the manager of J. Morrison Real Estate Partners. Yo, Tossin, who you think you talking to? Let me show my face real quick. Like, see, this is what I need to compose myself real quick because, see, I have a little bit of a temper. He's trying to play you like you a sucker. He is the management. Him and his wife are on the management team. And he's telling you he doesn't receive a salary, but the management or the management team can give him compensation. Who the fuck you think you talking to? He think you stupid. He thinks you're stupid. He has no respect for you. I'm telling you, if my money was in this fund, I would be at his front door tomorrow. Who you think you talking to, man? tell me I'm misinterpreting, I'm misrepresenting. He's saying it out of his mouth. And this is the corporate structure, allegedly. Why don't you address it? Shut me up. I don't have no problem making a video and apologizing and saying I was wrong. I'll invest $10,000 in Treff. Who you think you talking to? But see, you don't respect yourself to let a person do that to you in the first place. It's disgusting. He's gonna sit up here. He's talking in circles to you. You the investor. He's telling you he doesn't receive a salary. So you could feel sorry for him. Yet he got companies all up and down the business underneath an umbrella. It's called the conglomerate, is what he's going to say. And that you should embrace his conglomerate. He has JM Rep 23, JM Rep 28. He's given himself an 8% refi. Come on, man. Come on, man. And you want to call me, I'm a coon. I'm an agent. I'm an Uncle Tom. I'm a Sambo. I'm a Bussy Warrior. And he's a real one. He's a real one. He's swaggy swag. He's richy rich. He's telling you in your face. Yeah, I don't get a salary. But management, because I can defer, but management's going to give me money. Come on, man. Who you think, like, when you going to take pride in yourself? See, when I teach because I don't want you to trust me. I don't want you to give me your money. I don't want to manage your money. I talk to you about silver. I talk to you about gold because I own it. My money's in it. You could pull up a chart. Since I've been making videos on this channel, gold's up over 40%. I teach you about things because I want you to do your due diligence. I don't even know where my ledger's at. I tell you guys, buy these and buy this. Invest in yourself. I teach in my Tech Academy so you can be informed with information to make sound decisions. So you don't gotta trust me. I give you the documentation to read. I give you the tutorials to follow. Those of you who went through Uniswap, you just made $2,400. Not because of me, but because of the information I taught you. I get DMs every day from people who have made thousands of dollars from the information I've taught them. And I tell them, that's because you did it. You put that work in. That's you. You read the books. You did the work. I just put the information in front of you. I don't want to take credit for your success. Dare you sit up here? Yo, I really want to say some stuff, man, but I'm gonna be quiet because I'm telling you, man. He has no respect for you because he's basically saying, I got your money. What you gonna do? That's what he's telling you. What you gonna do? That's what he's telling you. You're not gonna do nothing. You're gonna shut up and take it. That's what he's telling you. That's what he's telling you. Couldn't be me. Couldn't be me.
What I'm stated by the company, the Tulsa Real Estate Fund. I don't receive. Mr. Morrison is not compensated directly by the company. And it says it in our audit. I'm not just saying it. Read our audit. It says, Mr. Morrison, Jay Morrison, I am not directly compensated by the company, the Tulsa Real Estate Fund. I don't receive a salary, not for marketing, not for real estate investment, not for underwriting, not for CEOing, not for any of it. I don't receive any salary from the fund. And I could. It's in our operating agreement, in our circular, that I can opt to receive a salary. So for all the many hats and roles that I play, if this was a money grab for me, I could certainly warrant and have earned a salary in which I do not take or intend to ever take. Although I may receive compensation from the manager or the management team or its affiliate entities. So what I'm saying is, again, we do have a management fee, a 5.5% management fee. That management fee is split, and it was split in 2019 between the 4 partners. that is not just a J. Morrison management fee, nor do I receive any other fees. Outside of that, I've deferred, and our management team has deferred our fees at times. And it says in our agreements, if we defer our fees, when we collect those fees, those management fees, we could collect them with interest. So if I was trying to play the small print game and trying to get every dollar I can get from the fund, because if I were a selfish person, which I am not, and I lacked integrity, which I don't, and my moral compass was off, which it's not, and I didn't care about my legacy or your legacy or our success, I could say, and we could say as management, we deferred this $200,000, so Treff owes us that plus 6% or 2%. We have never and won't charge the fund a percentage on the management fees we defer. We're not here to be petty. We're not here to make this a money grab. We're here to make this a success for our whole community, a legacy play. This is a legacy play for me, not a money play. We've been doing well before Treff. Treff cost us much more than Treff makes us. I will tell you that in all honesty and transparency.
Now, he said Treff has cost him more than he's made. This is what they start. Tosin, please tell me, what am I misrepresenting? What am I misinterpreting? It says, as of December 31st, 2016, and for the year ended December 31st, 2017, the company had $0 in cash and total liabilities of $15,350 is what was in the company. So now, am I missing something that's not in the document? Can somebody show me where he put up all of this money to start Tulsa? Because I'm looking at the documentation and I don't see that. I'm looking at the documentation and I don't see that. I don't see it. What I do see is what they started the business with. That's what I do see. That's what I do see. Tosin, is that a misrepresentation, Tosin? Am I misinterpreting something there, Tosin? Did he invest hundreds of thousands of dollars to start Treff? Because management's receiving hundreds of thousands of dollars. Can someone educate me? How much money did it cost to start the fund? Because you started the fund with no assets and no skin in the game. Please, man. Like I said, man, you're discrediting yourself. See, you think that you're helping Jay, you're hurting Jay. If you really wanted to help Jay, you would get with him and you'll start trying to, if you are so as knowledgeable as you claim to be, you'll get with him and put him on the game so black people can make some money. That's what you would do. If you really was about the people as you claim and you're so knowledgeable, because I believe that you was a person, you was connected to the people with the mansion, right? Am I wrong about that? Weren't you in front of the mansion when they did the photo shoot for Treff? I could be mistaken, but can you clarify that for me, Tosin? Can you clarify that for me, Tosin? Right? What wasn't you a part of marketing? Please, joke.
But it's a legacy play, and to me, it's necessary and needs to be done, and no one has done it before us in this company at this level in the last 100.
Okay, so it was yours, but it wasn't his. Okay, got it. So you let him floss with your stuff. Got it.
Years. And so that's the risk we take to do something historic. And I know the penalty and price of leadership and pioneership and trailblazing. And we are doing that together. It ain't just me. And it's not just the management team. It's not just our 2 employees and a dozen contractors and vendors who are part of our company. And now we have more employees in 2020. As of 2019, it was 2 full-time employees. So we explained the compensation to the manager. Just wanted to let you guys know that. So that full management compensation between 2018 and 2019 was $224,000 and $399,000 respectively. So about $50,000 collectively in management fees for those 2 years, 2018 and 19. So divide that management fee by 2, which goes to the management team, which constitutes 4 partners. So again, the management fee that everyone says Jay Morrison gets, Jay Morrison solely is not the benefactor. The management team is. That's split between the multiple years of the fund, not to mention no compensation for the 2 years leading up to launching the fund, that the fund was birthed, nor has there ever been or will be an interest that we charge the fund for deferred management fees, and it goes to the management team comprised of 4 partners, not just Jay, the CEO and manager. So I want everyone to have that cliff note. Let's see. We talked about the Parsons property and transactions with managers and the $548,000 loan. Want to be transparent about that and make sure everyone's clarity on that. Management agreements. Let's see. In addition, again, and transparency, family, to being fair to the fund, because I gotta be. Parsons, the asset in which I previously managed, and that the fund refinanced, because I also was managing Parsons and I didn't want there to be any overlap of our portfolio managers putting effort into Parsons, right? And doing any TREF work on the benefit of an asset that I personally previously managed. To be fair, I made sure that TREF charged Parsons a $773 extra management fee just to cover any management efforts that any TREF vendors put towards the Parsons project. Because I don't want double dipping. I don't want any arm's length transactions that are illegitimate. I want to be fair to our company. So if I felt like, if I ever feel like, or I think that there's any level that can be not fair, scrutinized, can just be, that just doesn't fit the bill, I make sure anything that we take the cost, meaning outside of TREF. So that's another income that TREF receives was actually management dollars from JM Rep outside of the interest on the mortgage. That was just for any management overlap. I'm being transparent with you. I'm being real. It's how I move. It's how I live my life. All right. Let's talk about, okay. Love this one. Big one. Intercompany marketing agreements. So in the SEC, in our audit report, and I have to admit, this was not written the clearest. This is very jargon-ish and jumbled. So I will take accountability for that. I wish that we wrote this in a clearer way so there could be less misunderstanding and more clarity for those who can debunk the misrepresentation. I'm going to read this whole thing and then I'm going to break it down for you. On May 1st, 2018, we, meaning TREF, entered into an intercompany marketing services agreement, which is not an uncommon thing when you have a conglomerate with multiple companies, multiple vendors and staff, right, under an organization. So TREF has other related companies that are under the Morrison group of companies. It does. TREF is managed by a related Morrison group of companies company. Like it is. It's a conglomerate. We can't shame black conglomerates, right? I just want to say that point. So what my job is to be fair within the conglomerate intercompany marketing or operational agreements and services. Sometimes in a conglomerate, different vendors or partners may do services for others. You just have to track it and treat it properly, which I promise to do.
So, guys, you're the chat. You heard it out of his mouth. He has a conglomerate. He said Morrison Holdings is part of the management. He's telling you this out of his mouth. I'm not misrepresenting. I'm not misinterpreting. He's telling you he has a conglomerate of companies, all of which he has some type of interest in. He's telling you that. He's saying this out of his mouth. I'm not misrepresenting and I'm not misinterpreting nothing. I never said it's illegal. What he's doing is perfectly legal. It's unethical. It's perfectly legal what he's doing because it's on the documentation. It's on the documentation. It's in the documentation, I mean. You, the investor, you didn't do your due diligence. And this is why you're in the position that you're in. Now, here's the funny thing. Because of inflation and because of the Fed printing trillions of dollars and wanting to spur inflation, these assets could start to perform over the next 3, 4, 5 years, 6 years. That's not the point. The point is not about the fund performing. The point is about at whose expense, who's getting the lion's share of the success, who's taking all of the risk, and who's getting the reward. Now I'm going to play this for you again because, again, Tosin, educate me, Tosin. Please help me understand. What am I misinterpreting and misrepresenting right here? Help me, Tosin. Help me, please. I'm going to play it for you again. Help me. He's saying that he has a conglomerate and that we should be happy for him.
I promise. Travis, who can debunk the misrepresentation. I'm going to read this whole thing and then I'm going to break it down for you. On May 1st, 2018, we, meaning Treff, entered into an intercompany marketing services agreement, which is not an uncommon thing when you have a conglomerate with multiple companies, multiple vendors and staff, right, under an organization. So Treff has other related companies that are under the Morrison group of companies. It does. Treff is managed by a related Morrison group of companies company. Like, it is. It's a conglomerate. We can't shame black conglomerates, right? I just want to say that point. So my job is to be fair within the conglomerate intercompany marketing or operational agreements and services. Sometimes in a conglomerate, different vendors or partners may do services for others. You just have to track it and treat it properly, which I promise to do. I promise to do. I'm going to say it a second time. So we enter into this agreement services with the J. Morrison Academy.
So this goes back to what I started the video off with. There's $339,000 that Jay states was paid out to vendors. Had I been on that call, I would have asked a specific question. Being that this is a conglomerate and multiple Morrison companies are underneath the Treff umbrella, are these quote-unquote conglomerate companies the vendors that received a portion of that $339,000? This isn't intellectual heavy lifting. You don't have to have a PhD in finance to listen to what he's saying and saying it doesn't make sense. It doesn't make sense. Not complicated. He's telling you he has a conglomerate, he has a sister company, he has subsidiaries. We're finding out all of this stuff now. You're finding out all of this now after he has your money. If he would have stated this prior to starting the fund, you would have never invested in this fund. I'm not here because I'm trying to tear a black man down. I'm here so that you can be educated going forward. We watched this with Umar. We watch this now with Jay Morrison. These brothers, they've taken money for ventures. And now when they get their money, when they get the money from you, now all of a sudden there's a problem with performance. Understand, Jay Morrison admitted out of his mouth, not me putting words in his mouth. He stated, transparency. No one knew what they were doing. Go back and watch my other videos. He said that, not me. He said that, not me. He lost money in a booming market prior to the pandemic. He said he doesn't receive a salary from Treff, but the management team and the management can compensate him or through an affiliate. He said that, not me. Now you're finding out about JM Rep, a company that he has a financial interest in. Now, he's going into deals all cash, utilizing no debt, no leverage. When we know cash is trash. When we know that the dollar has lost 90% of its purchasing power. When we know that real estate tends to appreciate faster than inflation. He stated this. He keeps telling you that this property is worth $900,000 and this one's worth $4 million and we have $1 million in appreciation. And the legacy said, where's the documentation to support that? Where are the appraisals? The actual documents that we can verify. All of his peers, every single peer, not me. I'm a coon. I'm an agent. I'm an Uncle Tom. I'm a bussy warrior. I'm a coon. I'm COINTELPRO. I'm Mr. Dubois from the Boondocks. I look like Tyler Perry. All of that stuff. You can say all of that. His peers, people like Kenny Rushing, people like DJ Envy, investors like the guy Muhammad Wilkinson, people like Tony the Closer, I believe the other guy, Nigel King. All of these people were investors or working with him or partnered with him in some capacity or were going to work with him. And they all got burned in some type of way. Roderick Stanback is on the LLC for JMA. He's on the actual LLC. Said he basically started it. Jay had no money. Everyone's hating on him. Everyone's hating on him. I'm just looking at documents, reading documents. So now he goes into this whole spiel about marketing, and he says that the marketing expenses, he didn't spend $766,000 on marketing. It only cost him $54,000 or something like that in marketing, something to that tune. He doesn't respect you. Doesn't respect you. Now, I never called him a scammer. Tony the Closer said that about you. I said you're unethical. And I stand by that. You're immoral because you didn't do what you said you were going to do. Remember this video? It doesn't look like you're buying back the block to me. It looks like you're buying a new house for yourself. It looks like you're buying nice things for your wife. Looks like you're about to have a beautiful baby. God willing. God bless you for that. But it looks like you and your family are succeeding. Your wife, who's on the management team, who, to the best of my knowledge, I can't find any information about her being a real estate professional. For that matter, I don't know anyone on your team that's managed money in a major capacity. Did you work at any investment banks, real estate investment companies? When we look at your track record as a realtor, it says you underperformed. Were you a celebrity realtor? These things matter. Your wife is a spoken word artist. What is, right? Is one of her companies or subsidiaries or conglomerates, are they receiving part of that $339,000 that goes to the vendors? These are the questions we want to know. And you had this call. You did it pre-recorded because you did not want to answer these questions. Because everyone that disagrees with you or has a question is COINTELPRO. Why didn't you go on Tone Talks? Why not go talk to Tone? If Tone is calling you out and you had nothing to hide, why not go speak to him? See, you can tell the integrity of a man and what his true intentions truly are when he doesn't want to address questions. Same thing with Umar. Anytime you ask them questions, they automatically get defensive. They automatically dismiss you. First, they'll try to attack your sexuality. They'll call you a hater. They'll call you a coon. They'll call you an agent because you pose questions to them, opposition to them. Why can't Umar show his degrees? Why is it so hard? If a person asks me right now, what qualifies you to teach somebody about coding? I can pull up a portfolio of projects that I've built. I can do that. What's so hard with providing documentation? Documentation ends conversation. I lost money on this YouTube channel. I have a video that I lost money on this YouTube channel. Transparency. I lost money. These videos are not monetized because of, I'm talking about a person like you that's a scammer and YouTube doesn't monetize them. Let me phrase that. I'm talking about someone that's an alleged scammer. I have to make sure that I'm speaking correctly. I'm speaking about someone that's an alleged scammer. So YouTube doesn't monetize it. Right? Now, no one, your followers, the red, black, and green, the Hoteps, the B1s, the Back to Africas, the Pan-Africanists, they'll never support me. I'm a coon. I'm not messing up your money. You and Umar, you will always be in business because there always will be gullible people that will go for what you preach. I make these videos because I know that there's a young man right now or a young woman, 23, 24, 25, and they're going through that phase in their life where they want more. And they may have $3,000 or $5,000 or $10,000 that they saved up or they received through an inheritance or whatever they had to do to get the money. And they're looking for a legitimate opportunity. And they're trying to change the circumstances in their life. And they'll come across a clown like you who will talk black, promise black, preach black, but it's really all about green. That's what I make these videos for. I want to be the spark in the young person's mind to get them to start thinking critically and serious about their future and about themselves and about who and what they listen to. I don't care about your life. I don't care about your prison, your criminal record. I don't care about what oil was put on you, what the ancestors invoked you. I could care less about any of that. I care about that when you take money from someone and you promise them that you're going to do something, you do what you say you're going to do. I don't care about none of that stuff. I have not noticed that these videos, I stick to the information. I stick to the documentation. At a certain point, and Yvette said this, and I agree with her. Even though me and her don't see eye to eye, I still agree with everything that she says on certain instances. If you want us to count your aspiration, then we have to also count your failures. And as of today, the FDMG Academy is a failure, and Treff is an absolute failure. Period. There's no getting around it. Now, why is this important? Maybe this pressure that you're receiving from the community may spark you to start doing things differently. Maybe this pressure that you're starting to feel may make you become more transparent and honest and become more ethical with people. We all have room for growth. Hopefully, this is your time and your chance to grow. I'm not perfect, and you're not perfect. At a certain point, bro, you got to change, because what you're doing right now is hurting people. You're hurting people. So, I'm going to leave the video like this. You can fool some of the people some of the time, but you can't fool all of the people all the time. Eventually, people see it for what it is. You might get a few here, you might get a few there. Your karma is starting to catch up to you. But you can fix this. You can fix it. You still have the money. You still have the assets. You can fix this. Get a proper team. Don't pay out any more management fees. That's $600,000 or $500,000 and some change that you paid in management fees. Use that money to go get a good team. Be more transparent. Tell the people what properties you own, what properties you're looking at. Do with the money what you said you were going to do, and you can turn this around. So that's something positive for you. For investors, because you always hear the pro-black, back to Africa, red, black, and green Hotep say to me, what's your solution? You know what the solution is? Look at Fundrise. Learn how to do wholesaling yourself. You go start your own fund. Invest in your education, because guess what? You'll never fail yourself. So with that being said, please like this video, share this video, subscribe, hit the notification bell. Make sure that you join my mailing list in the future so that you can be notified. And I'm probably going to back away from this. I feel like I covered enough of it. I feel like I did enough. If something major happens, I'll jump back on. But with that being said, guys, have a blessed and beautiful night. And I'll probably see you tomorrow, and we'll get back to talking about the economy and crypto. Have a blessed and beautiful night. Peace.